Hey, good morning, everybody. Welcome to the last day of July 2019. Glad you could join us today. Hey, again, just a reminder, if you like what we're doing here, please like our page, Statler Financial Services, and share this video with your friends and family. Really would appreciate it. Hey, before we get started with Dave today, again, want to just look at the different things that we have to offer here at Statler Financial. And one of the things I think is very important as we continue to talk about the markets continue to hit all-time highs and bouncing around them is that, retirement is basically a one-and-done deal. You can't mess it up. And so we've put together a must-have report on retirement strategies. 5 things you need to consider as you head into retirement, or if you've already retired, it's not too late to take some of these strategies into play. All you have to do to get your free copy is text the word retirement to 863-285-3815. Do it right now before you forget, or click the link right above this report and we'll take you right to the right page. Hey, again, I want to thank you for joining us today. We'll be right back with Dave.
105.7 Light FM. Some days it gets really busy figuring out what on earth is the most important thing to tell you about while we dig into finances. And that was the situation today because, boy, we got a busy day. Of course, there's one big 500-pound gorilla in the room. His last name is Paulson. We'll get to that in a second after I introduce you to our source for financial information, Phillip Statler, down at the offices of Statler Financial Services. Neither of us is a 500-pound gorilla, right, Phillip?
Absolutely not, buddy. I'm not. Hey, I like that little, hey, we got 6 seconds, let's go.
Yeah, we had so doggone much. I was thinking that I looked up and said, oh, God, I only got 6 seconds left of the record. Phillip, I hope you're ready. Well, we start out with our usual macro data dump, and it might not have occurred to folks, but we're at the end of the month, and that means starting on Friday, we're going to get the official unemployment rate for July out of the federal government. That's always preceded by the private sector number. ADP estimated that 156,000 private sector jobs were added to the economy this month. Is that good, bad, or mediocre compared to what the stock market expected?
Well, that's good. The market, the analysts were predicting about 150,000 new jobs. So is that a big deal? No, not really. But still, it's a beat, which is better than the other, which is a miss. So
yeah, it's better than this any day of the week, isn't it?
Right, but I think it also goes to the another thing you and I were talking about before we went on the air, and that's the ECI, which it took me a little while to figure out what that was, but that's the Employment Cost Index, and it went up 0.6% this last month. Now it's down a little bit for the whole year, but that shows that employers' cost of having an employee has gone up a little over 0.5%.
And, that kind of squares up with some of the things in the political sector we're talking about, that movement for a higher minimum wage, that everybody at $15 an hour movement that's been happening. And just the fact that because the employment picture is a little bit tighter, employers are stuck, I suppose you got to say, paying more to be able to get good employees, and kind of stands to reason that the cost of hiring a new employee is going to go up a bit in a tight unemployment setting.
It is. You're right, and that is part of the wage inflation deal is when we're at full or really past full employment, then to get the people you want, you got to pay them more money.
Absolutely, and there's two sides to every coin. The fact that wages and benefits and the price that goes to the employee goes up, that also means that investors look at the cost of those employees, and labor-intensive industries are suddenly going to look a little bit less attractive, I'd imagine, on the stock market.
Well, yeah, because that's going to weigh on their bottom lines, right? As those costs go up, it's going to take away from their profits.
Absolutely. Two sides to every coin. The other thing on the macro front today isn't going to happen until 2 p.m., and we've been beating this horse until it may not be dead, but it's at the very least limping. The Federal Reserve is going to announce their interest rate decision today. At the very least, most of my tip sheets look like they finally settled down, and they're predicting a 0.25% rate cut. If that doesn't happen, weird things could happen at 2 p.m., and there's a pretty good bet that we're going to be parsing every word that comes out of that federal statement, aren't we?
Yeah, they will, because especially they cut interest rates now. Everybody's going to want to know what's the plan for the rest of the year. Is there anything in the verbiage of that report that gives us any indication of how they're looking at the rest of the year in terms of continued rate cuts? Or is this a one and done? They won't really look at it until next year. That's going to be what people are really looking at in this report.
Now, there's going to be one of those Federal Reserve meetings where the parsing of the statement when they release it is going to be just almost painfully detailed. And when they announce the minutes and they release those, we're going to be parsing over those like crazy people as well in a few weeks.
You're right. They will. They'll always be looking through there, especially when we're seeing hikes up and down. Everybody wants to know what's the forward-looking language saying.
Absolutely. And the other element to it in the process is, and it cuts both ways. If the Federal Reserve gives us an indication that they're planning a couple, three more rate cuts later on this year, that says they see something dark in terms of clouds on the economic horizon. So that could be a negative economic report. And it's kind of one of those, heaven only knows how the stock market's going to react.
Well, you're right. I mean, if they start to look at saying, hey, we think that there's more rate cuts in the foreseeable future, then you're right. They see something that the analysts aren't telling us, the economists aren't telling us yet, that, bad things are fixing to happen. And so that would I'm guessing that would not be good for the stock market.
Absolutely. It's one of those things. It's art more than science, without a doubt. I've always said that investor behavior is almost the study of abnormal psychology, because how the reaction is going to be largely depends upon what the countervailing other factors are, as well as to how they interpret any statement that comes out of Washington.
Yeah, it does. So it is subjective to a certain degree, what every analyst or economist reads into whatever the Fed's saying.
It's going to be interesting. And yeah, we're going to expect the stock markets to look like a seismograph about 2 p.m., depending upon what the Federal Reserve decides to do. And we'll be here tomorrow morning to tell you what it was and analyze it. In the interim, earnings season continues. And while we're talking about national economies, kind of got to start out with the company that's bigger than a whole lot of national economies. Apple put their report out, and you and I were kicking around what one of the analysts was saying that I got kind of a kick out of. Oh my God, Apple's sales aren't dominated by the iPhone anymore. It's less than half of their sales, and I can't help but think that was a good thing.
I would think so too. Diversification in revenue streams, as long as it's not too diversified, can be a good thing, especially for a company like Apple, who's built their brand on the iPhone, the iPad, and those types of electronic devices. And so we saw the iPhone decline, their sales declined 12% this last quarter, but yet they still beat earnings expectations. They still beat revenue expectations. So we can see that maybe not having the iPhone as the primary breadwinner for Apple might be a good thing. They're trading up this morning, getting close to 4% this morning.
Yeah, they're heading for $1 trillion valuation again, which they were at for a little while, and then through a couple of hiccups as we got into trade difficulties, ended up bringing it down a bit. Yeah, for the sake of perspective, it needs to be said, the iPhone sales only made up 48% of Apple's growth. So it's not like the iPhone's dead, but services are growing, and that's offsetting the sales of iPhones. And to my mind, like I said, that's healthy diversification. They've still got a hot seller on their hands, without a doubt.
Yeah, they do. Hey, the other one we've got is an old line company that has struggled and struggled and struggled the last few years is General Electric. They came out with a profit of 17 cents a share, which was 5 cents above what was expected. Revenue beat the forecast, and they even went a step further and they boosted their full year outlook going forward. So they're looking good this morning. They're up almost 4% before the market gets cranking today.
Cool. Kind of like Mark Twain said, rumors of their demise were wildly exaggerated, right?
Well, it looks that way right now anyway, but they still may be on a short string. You just never know with GE and the way they've acted the last few years.
That's absolutely true. And they've still got challenges in their jet engine divisions and whatnot with all of the airplane questions. So they aren't out of the woods yet, with any doubt. Other indicators on earnings season. Have we got some more good news before we get to the bad news?
Well, we do got some good news. Garmin came out. They reported the GPS maker. They were 15 cents a share. And they beat by 15 cents a share. So revenue was ahead of forecast, and they raised their full year guidance. They're hitting on all four cylinders, they say, and they're up almost 6.5% this morning.
I was going to say they're at the top of my winner list of the stocks that I had listed like that.
And then we've got the Humana. The healthcare industry seems to be doing well. They beat by about 70 cents a share. Their revenue beat forecast. They have, they're big in Medicare supplements, Medicare Advantage plans, and that's where their strength seems to have come from here lately in this year, is their Medicare Advantage plan has really helped them. And they're getting ready to buy back $1 billion worth of stock from a third-party financial institution. So they're rocking and rolling. They're up 6% this morning.
Yeah, stock buybacks and beating the street, that never hurts to your stock price. A lot of celebrating, but it looks like they might not be having at least one brand of beer out there, because one of our breweries really fell flat, didn't they?
Yeah, they did. Molson Coors, they missed. They missed by 13 cents a share. Revenue was also off compared to what they were expecting on Wall Street. Now, they're blaming it on weather and weak industry demand. Now, I never knew that the weather really affected beer drinkers that much, but evidently it did this last quarter. And so they're trading down about 6% this morning.
I wouldn't have expected weather either. I've always gotten a kick out of Molson Coors stock trading symbol. If you're a brewer, can you think of a better stock symbol than TAP, T-A-P?
I know, exactly. I think that's probably a pretty good one, too.
Got one more quick one that gives us a good indication as to where we're going.
A good one. Well, we've got Amgen, one of the health companies. They had a pretty good quarter, beat by about 40 cents a share. Revenue was ahead of what was expected, and they're trading up about 2.5% this morning.
All righty. Generally more good news than bad news. Resetting the table this morning. It was a pink day on Wall Street yesterday. We didn't go anywhere exciting. Dow was off by 23. NASDAQ off by about 19.5. That was the big loser of the three indexes. And the Standard & Poor's fell by a little under 8, indicative of the fact that a lot of money is kind of staying put in advance of the Fed decision. 45 minutes before the opening this morning, Phillip, what do we got for indications on the market today?
So right now we've got the indexes all heading in the green area right now. The Dow's up 76 points. The S&P's up a little over 6. The NASDAQ's up 32. And gold's basically even right now. Silver's down about 0.5%. Crude oil's up 1% to $58.61 a barrel.
Oh, poop, don't want to see that. Asian rim markets, by the most part, were in red ink this morning at the close. Europe is mixed. Phillip, how do we make this thing work as far as stabilizing retirement? I need help. How do I find you on the phone?
Well, one way, Dave, is to get our free report on retirement strategies. It's a must-have if you're 5 to 10 years out from retirement or you're already retired. And it's easy, folks, for you to get. All you have to do is text the word retirement to 863-285-3815 to get that free report. And then for a financial x-ray report to actually analyze your current portfolio, give us a call at 382-0037 to schedule that free appointment. And then join us every weekend for the Statler Financial radio show, starting now at 6 a.m. on Saturday mornings, as well as noon on Saturday, and then 10 a.m. on Sunday mornings on News Talk 730 a.m.
And streamed online at newstalk730am.com. Phillip, you are absolutely everywhere.
Hey, we try to make sure we get enough information out there for folks.
Gotcha. Thank you so very much, sir. We'll catch you tomorrow, all right?
All right, you have a great day. I look forward to it.
Thank you much. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Stop everything.
Hey, folks, again, I want to thank you for joining us today. If you like what we're putting out there, please like and share this video with your friends and family, and like our page on Facebook as we continue to grow our audience there. And don't forget the free report on retirement strategies, a must-have for those people that are 5 to 10 years out from retirement. Text the word retirement to 863-285-3815. Until tomorrow, have a great day.